You are watching Market Watch, the brief overview of the key events from the world of finance. The oil market has always been one of the most complex and competitive markets. We are not talking about companies or even states, but about the unification of countries into groups in order to directly influence the supply and, as a result, the price of oil. We are talking about the most famous cartel in the world called OPEC+, headed by Saudi Arabia. This country is actively reducing oil production and supplies in order to keep prices from a significant collapse. Most likely, you know that oil production and export is one of the main sources of filling the budget and GDP of Saudi Arabia. A significant decrease in oil production has already led to a reduction in GDP in the third quarter of this year, and according to experts, it may lead to a significant slowdown in growth by the end of 2023. While the main competitor of OPEC+, the United States of America continues to increase production, even with a decrease in the number of active drilling rigs. According to the American Petroleum Institute, in August, the United States produced more than 406 million barrels, or approximately 13.05 million barrels per day. The gradual increase in production is due to the presence of demand and high price on the market, as well as government lobbying. There is an obvious conflict of interests between OPEC+ and the United States, because the cartel seeks to raise the value of black gold, even at the cost of slowing GDP, while the United States seeks to lower the price, satisfying the interests of consumers, more precisely, voters. Considering all this, it becomes obvious that only a significant increase in business activity and, as a consequence, oil demand, can support oil quotes. Continuing to talk about commodity assets, it is impossible to pass by gold. Throughout the week, it was traded in the sideways $1977 to $2005 per ounce. At the same time, a breakthrough of the lower boundary of the marked channel does not guarantee the development of a more powerful wave of decline. Nevertheless, it is extremely difficult to exclude the risk of a bearish scenario, against the background of a general increase in interest and risk. A significant recovery in key stock indices, as well as a noticeable decrease in the yield of U.S. government bonds, increases the likelihood of a sell-off in the precious metals market. Therefore, only an unexpected deterioration of the geopolitical situation in the world can increase interest in gold, pushing its value to a historical maximum. Also, the cryptocurrency market is in a phase of uncertainty. But the factors influencing the formation of the value of Bitcoin are very different from those that pushed gold quotes above $2,000. At the time of recording this video, investors have not yet received official confirmation from the U.S. Securities and Exchange Commission that at least one application for the creation of a Bitcoin ETF has been approved. This is a critical moment for investors and the market. After all, the appearance of information that none of the applications will be approved in the near future may provoke a wave of sales, while the bullish scenario will be activated subject to the approval of the application. It is difficult to say, but most likely the market will react to the approval of the application with a strong growth of Bitcoin, which will push the entire market up. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.